Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Now, gold has been one of the stellar investments to make over the course of the last few years, particularly over the last 24 months or so. And that's because international gold prices have been going through the roof. Now, I've had multiple conversations, not on this program, but in general with people who say that they invest in gold, but they invest through digital gold. And if you're wondering what that is, we're going to discuss it. But the reality is that you actually had the Securities and Exchange Board of India come out in November of 2025 saying that this is not something that falls under its regulatory ambit and as such is an unregulated product. Is that something that should worry you? Are there better alternatives out there? We'll talk about your strategy when it comes to investing in gold at the start of today's program. Joining me is Harshvardhan Roongta, CFP and co-founder of Roongta Securities. Harsh, thanks so much for taking the time and pleasure having you as always. Let me start by asking you about the definition of digital gold. What is this product? How does it work?
Hi, Alex. It's always a pleasure to be on your show. Well, it's a very important topic that you brought up. Why? Because, especially because we've seen the gold prices now shoot up in the last 1 year, and we've seen the increasing interest of investors to park money into gold. Now, there are several options through which an investor can invest into gold. Now, the popular ones, of course, are known. What we're talking about right now, what your query is specific to, is digital gold. So there are a few organizations who are offering the convenience of investing into gold, but in a digital form, which means that you will have a wallet kind of a structure on your mobile app, wherein you can buy fractional gold. So you can say, I want to buy 100 rupees worth of gold. It need not necessarily be in grammage. It need not be 1 gram minimum, etc. You have to specify the amount that you want to invest. So you could say, I want to invest, say, 100 rupees for that matter. I want to invest 500 rupees. So you'll be allotted gold in your mobile wallet equivalent to that much money that you're investing, under the promise that the respective gold is lying in the vaults of the organization that is providing this service. Now you also have an option going further in case you want to convert this money that you have in the form of the gold allocated to you in the form of a wallet allocation. You want to convert that into physical gold. That option is also available by some of the providers who are providing this option. So this essentially is one is coming under the SEBI. It's troubling SEBI, if I may put it so. And hence, SEBI came out with these regulations to specify and to clarify rather, saying that if anything goes wrong with you while you're investing into digital gold through these organizations, then SEBI is not the regulator for these products. So in case of any grievance, you cannot, SEBI simply saying, don't come to us.
Got it. So let's talk about and just want to understand how this works, right? Harsh, you have some insight into this with regard to the organization that backs the prices of gold when it comes to these digital products. Who ensures that there is, how do you know for a fact that there is actually physical gold available to you? Some of these organizations have tie-ups that facilitate that, right? So how does it work?
So, Alex, that's exactly where the cause of concern also draws in. Okay, so let me use one analogy and explain to you. We'll explain and we'll compare this setup with ETFs. Okay, so where there is a gold ETF offered by, say, a mutual fund, the fund house has physical gold lying to the extent of the outstanding units that are being created. So, for example, if there are 1 ton of gold in the form of ETF units, which have been invested, have been given to investors, 1 ton of physical gold will be lying in the warehouse of the mutual fund. So, mutual fund appointed warehouses, there would be 1 ton of physical gold lying there. Now, who oversees all these things and who ensures that there is regulatory oversight on all this is SEBI in this particular case. So investors have that confidence saying that there is a regular audit being conducted by somebody else. There are certificates, there are regulatory oversight. SEBI is going to look into it. If you have any grievance, you write to SEBI. SEBI will take that up because they are regulating the mutual fund industry. Now come to digital gold. Now, digital gold, that's exactly what SEBI tried to explain, saying that we are not regulating any organization that is offering you digital gold. In case there is something that you have, don't come to me. Now, what are they trying to imply? Now, this entire industry offering digital gold is under the self-regulatory mode right now. There is no organization, there's no regulatory body that is overseeing the functioning of these organizations, which means in case you have a mobile, I'm talking about an extreme case, I'm not saying this is a general case. So in case, say as an investor, you have been buying into digital gold of one particular organization and in your wallet, you see that you have, say, probably 100 grams of gold that you accumulated over a period of time. Now, it is only on the trust of that organization that you're dealing with that you believe that they have 100 grams of gold in your name lying in their vaults. There is no regulatory oversight. Now, those organizations on their own to display solidarity have hired auditors and they've come out with reports saying that, look, there is somebody looking into our warehouses and are certifying that there is gold lying there. Now, how much do you trust the organization and the third party auditor, etc., is individually to the responsibility of the investor. Now, let me point one example which needs a point of caution, and it's important for investors to know. In any business activity where there is no regulatory oversight and your dependency is entirely on the morale and on the disclosures of the organization is something that investors would really need to be very careful about. Let me give you an example, and a classiest example in this case would be a case of National Spot Exchange. Okay, this is one exchange that was under the regulatory oversight of the Forward Markets Commission. It was an exchange in that point. Now, the scam that opened up in 2013, it was to the surprise of everybody saying, so it was an exchange that was supposed to hold commodities against which trading was happening. Now, when the scam opened out, it just simply said the warehouses were empty, right? And in the entire period of operations, the exchange continuously gave warehouse receipts. They made declarations saying that there are stock lying in my warehouses, etc. So when you come into a scenario like this, where you had an experience in the past, where a national spot exchange under the regulatory supervision of Forward Markets Commission making all self declarations, later on you find out there is nothing in the warehouses. How much do you think you could trust somebody or an organization for that matter who on self-declaration is saying that I have gold which you bought lying in my warehouses? So I think
Particularly Harsh, when there is an option available that gives you a guarantee that is backed by a regulator. So nobody is saying that the organizations that are offering these products are false and that they're lying to you. It's just that regulations don't yet exist. And so in the absence of regulations, you might as well go to a regulated product. So from that perspective, let me ask you about this, because people continue to wonder about ETFs having the commodity to back whatever is invested, which is why I've had conversations with people who invest in physical silver as well, thinking that, no, I don't trust that the silver ETF actually has silver. So in your opinion, my understanding from what you've said so far, Harsh, is that you don't like the idea of investing in digital gold. So where should you invest and why?
yes. So Alex, you're absolutely spot on when you say that if I'm comparing the negatives that are potentially there in digital gold, I'm directly comparing it with something that I have as an option as an investor in a regulated field. Now, if I didn't have a regulated option, then I may want to consider digital gold for that matter. So I'm saying while I have an option to invest into a regulated product under the supervision of SEBI, then I rather take that. Now, answering your query, if an investor has a doubt that I'm investing in a silver ETF of a mutual fund, and I don't think that they have equivalent amount of silver lying in their warehouses, then it is better that that person goes and buys into physical silver. It's similarly, and I'm also assuming the same investor will also not buy into any equity or debt fund of that mutual fund because they are not going to see the shares that are being held by that mutual fund, right? So if they do not have the confidence of a regulated industry like a mutual fund being supervised by a super regulator like SEBI, then I think that investor most certainly should buy physical silver and should not also invest into mutual funds at all. Because if you're investing in a mutual fund, the fact sheet states that the scheme is holding underlying securities. And if they don't trust that they have underlying silver, they should not trust that they do not even have the shares in their account for that matter. So I think it's a bit of an exaggeration when a person inclines to say that I don't believe that probably a Kotak mutual fund will have equivalent amount of silver in their warehouses, or an HDFC or a Tata mutual fund will not have that. I think it's a bit of an exaggeration. It's equivalent to a person asking a doctor if a medicine has side effects and that person is eating street side food and very happily enjoying it. So it's about where you want to doubt people, you will continue to doubt, and if you want to trust somebody, you will trust even without having any valid reasons for believing otherwise.
Okay, so then in order of preference, let me lay it out to you, right? You have ETFs, gold ETFs, you have gold and silver ETFs, you have gold mutual funds, which do not require you to have a demat account. You have a multi-asset funds, some of which have a pretty sizable allocation towards commodities, at least 10% in most cases. And you have digital gold as an option, right? So in order of priority, in your opinion, and then you have physical gold also, how would you rank them?
So see, one for me, I'll go with the method of elimination to start with. So one is digital gold is completely out of the equation as of now, only because it has no regulatory oversight. The moment it falls under some regulatory oversight, I think that's an option investors can continue to have. Other than that, whether to pick in paper form again, I'm talking about ETFs and gold funds would largely depend on the convenience of the investor. So if an investor is convenient, it's easy and it's comfortable rather with buying into ETFs directly on the exchange, maintaining the records of purchase and buying. He knows the difference between the traded price and the INAV. So if they're okay with all of that, you may most certainly pick up an ETF. If not, you don't want to bring them into units in their demat account. You want it to be automated in the form of an SIP, etc. Mutual funds offer the gold fund option, which is also very good. So eventually, the objective is what? That you want to benefit out of the price rise of the commodities. So you have a silver fund exclusive, you have an exclusive gold fund, you have a gold and silver fund. All those options are available. Now, with regards to whether you should take one over the other, as I said, it's purely depending on how comfortable you are dealing with ETFs directly or you want to come in the mutual fund space. Comparing it to now a physical gold is that there are certain parameters you need to keep in mind. Physical gold needs to be secured and stored, and there's additional cost of that by yourself. So which you will most certainly want to consider whether you want to do that or you just want to leave it and you want to gain from the price rise of gold and silver, which you can make even when you invest into paper gold. So choice between ETFs and gold funds, I've explained. If choice between paper gold and physical gold, which is the ETF mutual fund versus the physical gold, I think it's to do a lot with the convenience and the comfort level of the investor.
And finally, multi-asset funds, you've seen the kind of flows into them. And part of that, I would think, is because of the ongoing gold rush. In a sense, I think, Harsh, given the volatility of the metal that we've seen in the recent past, it's not a bad choice for people that are going for a taste of gold and silver with the ability of a fund manager to take a tactical call much, much quicker and much more efficiently, perhaps, than an individual would.
Yes, Alex. So, with regards to multi-asset funds, the advantage being that, there is an automatic allocation to precious metals as well. So that is equity, debt, REITs, commodities, everything fits into one product. And the good part is that the rebalancing happens automatically and you are not as an investor involved in it. So say hypothetically you started investing in an XYZ multi-asset fund. That multi-asset fund's mandate is that they will invest say 10% into commodities. They'll have equity, debt, and other things, as a particular allocation. Now, the moment this allocation changes with gold prices probably doubling, say for example, the gold prices double, and the fund had 20% allocations toward gold, their mandate says that look, I need to have 10%. So they will automatically rebalance it. They will sell some gold and they will buy into equity or debt for that matter. So this rebalancing also automatically happens for an investor in a multi-asset fund. And yes, most investors are, like all of us, being individuals and humans, we are very emotional. The moment prices go up, and we keep listening to stories saying that it will go up further. And when it starts falling, we believe that it's going to never stop falling down. So we are very driven by our emotions. So if we want to overcome that bias that we have, it's best to go into an automated mode, which is a multi-asset fund, wherein somebody else takes that decision based on predefined allocations. I think for those who want to have allocations to precious metals and do not want separate funds for it, can most certainly look at the multi-asset funds.
And finally, not a recommendation, but just quickly asking you for a few names that you've looked at, both in the ETF space as well as in the multi-asset fund space, because there are several strategies in the latter that people might not know about. So things that stand out to you, names that stand out to you, Harsh?
So I think any fund, whether ETF or the underlying gold fund, would need to have sizable AUM
Mm.
because see, ultimately, if a gold fund also invests into an ETF, right, of the same fund. So say, for example, ICICI Gold Fund will invest into gold ETFs of ICICI itself. So ultimately, the liquidity is going to come from the AUM that the fund manages. So the larger the AUM in the ETF is definitely going to have a better price discovery and liquidity for you. So, I mean, that is one of the parameters, of course. The others being there's a tracking, you have to make sure that it tracks the returns of gold as closely as possible. Putting all these together, not to confuse anybody too much, I think just pick some large fund houses with the largest AUM. Start with that. That would be one criteria that you could use to filter as to saying which AUM, which AMCs I want to invest with. So the big ones like an ICICI, Kotak, Nippon for that matter, ABSL, Tata, these are the ones that you could consider for your gold allocation into mutual funds or ETF.
Got it. Okay. All right. On that note, Harsh, thanks so much for taking the time. Pleasure speaking with you as always.
My pleasure, Alex. Thank you.